Keltner channels and Bollinger Bands look almost identical on a chart, but they measure volatility in fundamentally different ways. Today we're going to dissect both, show you when each one shines, and reveal a powerful confluence trick that uses them together. If you've ever been whipsawed by a band touch, this is the episode for you. Bollinger Bands center on a 20-period simple moving average. The upper and lower bands sit 2 standard deviations above and below that mean. Because standard deviation reacts quickly to price shocks, Bollinger Bands expand violently during volatility spikes and contract sharply during quiet markets. They are, in essence, a statistical envelope around recent closes. Keltner channels use an exponential moving average, typically 20 periods, as the midline. The bands sit a multiple, usually 2, of the average true range above and below. ATR is range-based, not deviation-based, so it includes gaps and accounts for the full high-to-low travel. Keltner bands are smoother and less reactive than Bollinger. This is the key distinction. Standard deviation measures dispersion of closing prices around their mean. ATR measures average bar range. When a market gaps overnight, ATR captures that pain, but standard deviation only sees the close. That's why Keltner bands feel more honest in markets with frequent gaps, while Bollinger reacts faster to clustered, close-to-close volatility. In a range, price oscillates between the outer Bollinger bands and mean reverts to the midline. In a trend, price rides the upper or lower band, a behavior called walking the band. A tag of the band is not a sell signal by itself. The real edge comes from contraction, the famous squeeze, which often precedes expansion and directional movement. Keltner channels behave more like a trend filter. Because the EMA reacts faster than an SMA, but the ATR bands are smoother, closes outside the channel are rarer and more meaningful. A close above the upper Keltner band signals genuine trend thrust. Inside the channel, treat the market as neutral or consolidating. Here's the Confluence Pro's use. When Bollinger bands contract inside the Keltner channels, you have a squeeze. Standard deviation has fallen below ATR, meaning closes have tightened relative to true range. This compression almost always resolves with an expansion. The squeeze itself doesn't tell you direction, so pair it with a momentum oscillator or a break of structure to take the trade. Watch this synthetic setup. Price coils, Bollinger bands pinch inside Keltner, and ATR is at a multi-week low. Then a wide-range candle closes above both upper bands simultaneously. That dual breakout is your trigger. Stop goes below the midline EMA, target is a measured move equal to the prior consolidation height. Let's validate on Apple Daily. Notice the periods where Bollinger bands contract inside Keltner, then expand violently. Notice also the trending sections where price hugs the upper Keltner band while Bollinger bands ride alongside. The combination tells you which regime you're in: compression, expansion, or sustained trend. Both tools lag. Bollinger bands can give false squeeze breakouts when news whips standard deviation around the mean. Keltner channels can keep you in a trend too long because ATR smooths over reversals. In choppy, low-volume sessions, both will fake you out. Never trade band touches in isolation, and avoid them around major economic releases. Layer these bands with directional tools. ADX above 25 confirms the trend you see on Keltner. RSI divergence at a Bollinger upper band tag warns of exhaustion. Volume expansion on a squeeze breakout validates the move. The bands define the regime, momentum and volume confirm the trade. 3 mistakes to avoid. First, fading every band touch in a trending market gets you run over. Second, using default parameters on every time frame and asset ignores volatility regime. Third, treating the squeeze as a buy signal when it is really a setup, not a trigger. Wait for the expansion candle. Bollinger uses sigma around an SMA and reacts fast. Keltner uses ATR around an EMA and runs smoother. Bollinger inside Keltner equals squeeze. Tomorrow, pull up your favorite chart, plot both with default settings, mark the squeezes, and tag the breakout candles. Watch how price behaves. This is education, not financial advice. Trade your own plan, manage your risk, and I'll see you in the next one. If this helped, do me a favor. Hit the like button, subscribe, and tap the bell so you don't miss the next one. See you in the next video.